Nilqakom lura l-Flusek, infakarkom li qegħdin nitkellmu dwar riżultati finanzjarji tal-Bank of Valletta PLC mal-missiden tagħna l-kap eżekuttiv tal-bank, Mr. Hunkin. Mr. Hunkin, more questions coming your way.
Thank you.
So, with regards to loans and advances to customers, these have increased. How has this been achieved, and which sectors of the loan book continue to grow?
So we've put a lot of emphasis on trying to grow the lending side of our business, both to support customers here in Malta, particularly over the last couple of years, businesses we've supported through loan moratoria or development bank funded loans. We've seen good growth though in home loans in particular. That's grown by over 5%. We've simplified our product ranges, tried to make it easier for customers to do business with us, and we've seen good growth, over 5% in the home loan side of the business. In the business side, we've again, I think our sanctions in the first half of this year were up 7% compared to the same period last year, which was also strong. But we're seeing it across all sectors. And this year, it's very much about funding business and growth, as opposed to providing COVID-related support.
With regards to bank deposits now, these also have continued to grow at a cost to the bank, like you were mentioning earlier, partly also due to investors' lack of appetite for riskier investments. Are you noticing any changes in investors' attitudes as markets experience sharp declines?
Yeah, the markets have seen a lot of volatility in the first half. Yes, and we have seen a reduction in our clients' appetites for more longer-dated investments. Customers appear to be still harbouring their money in shorter deposit-related. I think as yields return, we will be working hard to try and support customers to get a better return for their money. Interest rates are so low, banks are not a healthy return. So being able to support customers move into better products, and in particular pensions, we'll be putting a lot of focus on going forward. I would hope to see that we see a return to customers favouring those types of products.
Okay. Given the Dejlu MR settlement, is the bank still adequately capitalised?
Yeah, we'd already provided, as I say, 80 million of the 180. So we took 100 million out of capital effectively, or 76 net of the profit that we've made in the first half of this year. But the bank had set aside significant amounts of capital. The potential liability for Dilemar was 383 million. It was huge. We never felt that the case had any merits at all, but we had to settle on the case because this could have dragged on for 10 years. And that was tying up our capital. We had the capital we couldn't use. It was acting as a constraint factor in dividends as well.
It would have proved more detrimental.
Yeah. But now that we've closed the Dilemar situation, we don't have to have that contingent capital to demonstrate that if it were a higher settlement, we could cover it. So that's gone, but that's kind of reduced our net capital requirement. But also, we were so well capitalised that we are still on core, what they call core equity, CET1, core equity tier 1 capital. We're at 20.4%, and in total capital we're at 24%. These are very, very strong capital positions for a bank to be in, even after dealing with the Dilemar situation.
Very good. I think most shareholders did not expect the bank to pay an interim dividend. But what is the long-term policy of the board of directors in this regard?
So, I've been here nearly 3 years now, and during that time we've had COVID, we've had a lot of regulatory issues and changes that we've had to deal with. Including 80 million we had to raise in 2020 for new provisions for credit changes, and COVID changes. So through all of these, and litigation, Dilemar, Swedish pension, Valletta property fund, all of these things we've got past. We've also been investing in making sure the bank is safer. We de-risked the bank. We put a lot of investment in governance and risk and controls. So the bank is kind of past I hardly dare speak because who knows, but let's hope there's not something akin to COVID to come, but we're past all of the problems. And we've been trying, and as a board and as a company, we've been working hard to stabilise the bank and to put it back on a long-term, steady, sustainable position. Our aim has been to achieve that and to return to the steady dividend income stream that would be expected of a normal, stable bank. We're on track to do that. Diulimar's gone. That was the last big hurdle, so I would very much hope, and the board are committed to returning to more usual and stable dividend streams.
What are the short-term risks that the bank could be facing in view of the present global political and economic situation?
We don't have, or we have extremely limited exposure to Russia, Ukraine in that way, and not a lot of our clients are directly affected by the situation. So the short-term risk is definitely one of global inflation, rising prices coming through and hitting both consumers and businesses. When I talked about our credit provisioning model being driven by economic factors like inflation, the short-term threat we've already kind of started to protect against by raising future expected provisions that address the economic situation. But the real short-term threat is one of hyperinflation, global inflation, which time will tell. There's also increasing interest rate situation, talk of recession in different parts of the world. These are the economic factors that will impact all banks in that sense.
And finally, what are the areas of opportunities that the bank is envisaging?
I talked about we're through a lot of the hurdles. We've got over a lot of the hurdles we needed to. The real opportunity for us now is that we can get back in charge of taking the bank forward in the way that we'd really like to. Interest rates increasing will take away a huge cost and drain from the bank that's been there for the last few years. So that's an opportunity. We've got freed up capital that we can now invest, and having cleared a number of regulatory or addressed a number of regulatory projects, we're free to invest in systems that make it easier for our customers to do business with us, easier for our staff to operate, and therefore that gives us the opportunity to really look to grow our business.
Mr. Hunkin, thank you so much for being with us today and for explaining the financial results to our viewers. I augur you continued success in the future.
Nicolette, thank you.
Bekk wasalna fit-tmiem programm ieħor ta' Flusek minnaħa tiegħi passoltu ringrazzjamenti jmorru għal New Age Media, il-producers tal-programm, il-crew tekniku ta' Net Television, ringrazzja ħafna lill-sponsors tiegħi fuq kollox ilkom tal-li segwejtuna. Jiena nkun magħkom il-ġimgħa d-dieħla, saħħa u grazzi.